Why do I need loss runs to quote my commercial insurance? We're going to talk about that in this video. Loss runs. If you found yourself here looking at my goofy face on this screen, that is because you are in a situation where someone has asked you for loss runs from your previous insurance policy. What are they? Why do I need them? What do I have to do to get them? Well, those are the three main questions that we're going to answer in this video. First off, you should know, and I say this with all due respect, insurance companies are not charities. I understand there's a lot that goes into your situation and the insurance company situation, but understand that insurance companies are often stock companies, and there's people that want to make sure that the insurance companies are turning a profit. And so the way they do that is through underwriting. They need to make sure that whatever risk is what they call it, that is being insured against, that they're appropriately pricing that risk against what maybe has happened in the past. Loss runs are a snapshot of what has happened in yesteryear for you and your company, what your relationship is between insurance and your business. Obviously, as you can tell, if you have lower loss runs, that probably equals a lower insurance rate. Very true. The loss runs are a direct relationship when it comes to how much an insurance company may charge you for the insurance. So, one of the ways they know how to do that is taking a look at what the loss runs actually say. Number two, severity of claims versus frequency of claims. In the insurance world, a big loss, but that doesn't happen very often, is often called a shock loss or a catastrophic loss. And if your loss runs show a really good history of no insurance claims, a really well-run business, and then all of a sudden, because of a weather event, you had $1 million loss against your business, well, the insurance company is actually going to look on that favorably, potentially, and say, hey, they had a situation, it was unfortunate, this is exactly why we have insurance in the first place, to help people recover from these things. I'm not going to ding them too bad. I'm not going to charge them too much for their insurance rate because of that one loss. But frequency of claims, that's a different story. Frequency of claims shows one of a couple things. One, there are some business practices in the company that aren't all that healthy. And so what that's leading to is a repetitive loss scenario where insurance companies have to fork out money time over time, often above the amount that you paid for the insurance policy, in order to make the insured whole again. And if you're looking at shopping your insurance, a new insurance company is going to want to see that. Also, in frequency of claims, it may indicate that you are filing claims for small, insignificant losses. Now, you could make the argument, well, this is exactly why I have insurance. And I hear you, I understand it. But understand also, again, back to our first point, insurance companies are not charities. They're trying to make a profit. And if they write a whole bunch of people that file small claims every single time there's a problem, then they're not going to make money and they're not going to exist. And then everybody's going to have to pay more. So understand that the frequency of claims is a major issue. You should be working as a company to lower the amount of times that you actually have to file a claim. We can get into what that's called. It's called lots of different things in our insurance industry, the total cost of loss, things like that. However, save it to say, frequency, severity, we got to take those into consideration, and the loss runs help us do that. Number three, the commercial insurance game. Commercial insurance is still a person-to-person relationship. And not just like me as an agent to my customer, but me as an agent to my underwriter or the insurance company itself. The better relationship I have with the underwriter, the better I tell the story of what your business is and does and how it's working, is going to obviously equate to a better insurance cost for you as an insurance company, consumer, as an insurance consumer, you have needs that need to be met. So in the commercial insurance game, it's always good to get the best and most accurate details up front. So we have a starting place to work from so that when we're going in and trying to price what your insurance might cost, we have a good, healthy picture at what amount of risk we can take as an insurance company and also provide you with adequate coverage, but also make sure that we are providing a profit. Again, not charities. We're trying to send profit back to our companies and back to our stockholders. And so what we're trying to do is make sure that we can line all that up. And the more information we have in an official way to do that will help us and help you in determining what the final cost is going to be for your particular insurance situation. Sorry that was long-winded. It is what it is. The insurance game, I call it, the commercial insurance game. You just have to have those details written out, figured out in black and white, because a lot of times we're dealing with imperfect information. The majority of clients that we deal with don't know what the loss history is or can't provide a loss run for us. And in those situations, the insurance company is charging you way more than you should be getting charged for the insurance that you need, and that's because they simply don't know where to start from. So you're getting what's called that rack rate. The top rate that might be charged to someone in your industry is getting charged to you because it's not written out what your experience has been with insurance companies. Loss runs, loss runs, loss runs, they're vitally important. The more transparent you can be with your agent and the insurance companies that will ultimately place you with is only going to benefit you when it comes to that bottom line figure in the expense category for your insurance coverage. Loss runs are really, really important to get them accurate, to get old losses closed. We didn't even talk about that, but to keep those loss runs as clean as possible. Thank you so much for taking the time to watch this all the way through on behalf of all of us here at Callahan and Rice Insurance Group. Thank you for watching.